Hello traders, the title of the video is how to use Fibonacci median support and resistance levels like a pro. Alright, so you may be saying, George, what is Fibonacci median support or resistance level? And I will say to you, stay with us, and I will be helping you to understand what is a Fibonacci median support resistance level. All right, so you have been using Fibonacci retracement, Fibonacci extension. I have been talking about Fibonacci trading strategies for years at dayprotrader.com. There are many powerful Fibonacci strategy, and especially if you are not using Fibonacci retracement or extension, you are missing out. The financial market, is all about Fibonacci. You want to know every trick about Fibonacci trading. We can set profit target using Fibonacci extension. All right. We can exit the trade using Fibonacci extension. We can use Fibonacci retracement to set our stop loss and so on. There are many things. Trading software. Most of the trading software use Fibonacci, all right? Trading robots use Fibonacci, and you have said that you have spent millions of pounds, millions of dollars buying all kind of trading method software. Most of them will use a Fibonacci, all right? Very, very powerful tool. So today I have been looking at this chart and I found something very interesting, and it's happening all the time. In fact, I was telling traders that anytime you draw a channel, whether a rising channel, horizontal channel, or declining channel, you must also acknowledge the median line. Another thing that I say to traders, anytime you see two key levels, so you see here, okay, so there is a resistance here, yes or no? There was a resistance here when I placed the line, and look at that. And there was another resistance here. All right, so the price going up from this level to this point, yes, okay. So very simple strategy that you can apply, which is in line with what I'm going to share with you today about Fibonacci median support and resistance level. So two key, no more horizontal key support resistance. Just you draw two significant, those are significant key support and resistance level on a monthly chart, on a quarterly chart, on a yearly chart. You can do that. All right, and then you just find where is the median line. Here it is. Pay attention carefully, my friend, because I want you to use a simple, powerful trading method. Whether you are day trader, scalping, swing trading, you can just apply this method and look for trading opportunity around those key levels. You don't want to trade anything else. Okay, here it is. So price was there, you see, went up there. We draw that line. So after the price start going down here, we draw that pink line there, okay? Look. Did we have a trading opportunity around that pink line? Look at that. Can you see that? A double bottom chart pattern. This is a beautiful double bottom because the price came down. 1, 2, 3. I talked about this particular double bottom chart pattern before. When the second part came down, 1, 2, 3. So price goes down from the first low, bounce up. And then before you form the second double bottom, you go down 1, 2, 3. Look at that. This is a high probability turn setup where at the median line of two significant key levels. Look at that. After that, boom, 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 bye-bye. Okay, you may say, George, this is just a coincidence, a chance. So let's do another one. So we are choosing this key level down. And this one here. So price went up there, and now we're going to find a median line of those key levels. I don't want to cheat, so I'm going to be very careful. See, somewhere there. Do you agree? Right? What the price did there, you see here? It came down, bounced up, went below. So it's a three move. One move down to retest it, one move up, and then again it bounced. Look at this candlestick bar. This is a bullish candlestick bar. Do you know that? All right, a hammer plus a bullish candlestick bar that is closed. After those two candlestick bar, this is a high probability candlestick pattern trader will trade here. Boom. So from here, you went to that resistance again. Are you getting it? Are you getting the power of the median line? We're going to come back to the Fibonacci median support. So there's another one we saw this level and this level here. Significant key levels. All right. median line somewhere there. Bounce back to that median line. Is it happening all the time? Will you say that, George, is happening all the time, but I didn't see it. Now you see it. So before you were blind, now you can see. So now let's begin our discussion today, because you are my friend. I don't want to hide anything from you. All right, so here we are. So I placed on my chart Fibonacci extension. So I went now from here all the way up here. All right, now you see, start going now. We have Fibonacci extension 138.2% level, 161.8% level, 200% level. So talking about Fibonacci, all right, median support and resistance level, we can do the same thing whether it's a Fibonacci extension or retracement. Any Fibonacci key, you see all these dotted line on my chart, those are Fibonacci key levels. So we want to place median line on those Fibonacci key level. You see, there was one Fibonacci key level here, agree? There is another one here. So prior one over here, see this is the 0 point, this is the 100%. So between the 138.2% and the 100% level, we place a median line. Do we have a trading opportunity? Look at that. Can you see that? Look for a candlestick pattern. Look for trading opportunity. All right. Well, this is it. The power of Fibonacci median support and resistance level. Okay, let's do another one. Do we see two key levels? So between the 161.8% and the 138.2% level, all we do, we just place a median line there. Did you see a trading opportunity? Here it is. Resistance, boom. Look at that. Trend line is kaput. So the first candlestick was bearish, cap down, or look at this one. Look at this one. Look at this. Break below a little bit, retest gently, and then they take it down. All right. Now where are we? Okay. Talking about Fibonacci median support and resistance level. So this is something that I want you to try. So as always, all right, you learn something new. What do you need to do? Master it. How do you master it? You're going to practice. You're not going to master it in one day. You're going to practice. Someday you may say, George, this is a dodgy strategy. Someday you may say, George, wow. Maybe the first time you try it, it worked beautifully. You say, wow. And then the second time, maybe it didn't work perfectly, and then you dump it. And then a few months later, you remember, I say, all right, I'll go back to that. So through the try, you will master it. That's how you do. Use a demo account file. Don't go live with a real money. Look at it. This is so between the 200% level and the 161.8%. So all I did, prior went out from here to here, all this blah blah blah, come down, do all this. Now I choose this point and this one, and I'm working with those Fibonacci key level. Look, today that's where we are. The median line between the 200% and the 161.8%. The median key support and resistance level, prior found a resistance here. Look at that. This is what this is a specific candlestick pattern. Have you checked our playlist at Day Pro Traders? If you do not, check it out. I have compiled a series of videos about, candlestick pattern, where we have a shadow piercing through a key level. It's an invitation to sell, to look at an opportunity to sell using a top-down trading method. Look at that. Look at this shadow piercing through that median line. Another one here. And so on. And so shadow. Is it good enough for you? So I will show you another one. So we work with this one, we work with this one, we work with this one. So bring it here. Between the 78% and the 100%. Yeah, you see? So the movement was going on, or we are just working with this section here. I went out from here and start coming down. So now here it is. So now finally, in 2011, we have a trading setup there. Is that too difficult? It's not difficult. Now you may say, George, how do I select the point? Just select them. Just select the point. Went up from A to B and then change the direction. If you go from A to B and then change in direction, you can apply that strategy. We can do the same thing from here all the way down here, all those key levels. So, but for those of you who are day trading, all of us suggest, if you don't want to see the yearly chart, you don't want to see the quarterly chart, go to the monthly chart. Draw your Fibonacci key levels. You see, like I have them now, okay? All right? So I will just switch, all right? Like when we were here, I have that, you remember when I was talking about this, it was here. You just switch your lower time frame to your 15-minute time frame to check whether you can see that line, all right? All right, here it is. On the daily chart, it's appearing now. Look at all this triangle here. It's a consolidation here. It's a triangle, right? It's a consolidation in the triangle. People were selling here, buying here, selling here, trying to buy here. It crashed out. It crashed out from another, a tiny, triangle here. All right. So you may say, all right, let's show me another example. So you get a message now. You get it? All right. So hold on, please. I'm looking for a chart that is clean that we can draw on it without messing up too much things. So this is about Fibonacci median support and resistance level. Well, you get it now? Whether it's Fibonacci, we can apply it for Fibonacci. So now I'm using Fibonacci retracement. So you press Fibonacci retracement. So price went up from here to here. We can use it for Fibonacci retracement. From here to here. Okay, so median line between this one and this one, somewhere there. All right. So as the price went up, blah, 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 look, it hit it, come down. Now we have again, look at that doji and the bullish candlestick pattern. It's a candlestick pattern here, and doji and the bullish candle pattern. All right, here it is. And then going up. The median line between two Fibonacci key levels. Another one here. This is a nice one here. Well, do you agree? Somewhere there between the 50% and the 61.8%, we draw this line. Suppose now price are going down, boom, 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 boom. Now you want a ball, come back and retest it. Computers, trading algorithm, trading software are using this method. As a human being, with 2 hands and 10 fingers, this to make you laugh a bit, you can do exactly the same thing. All right, I will apply now Fibonacci extension. It works beautifully if you go to the higher time frame, especially for the monthly chart at least. All right, can use any time frame, but it works more powerfully on the higher time frames. So you break it down from the higher time frame to the lower time frame. All right? And then you're looking for a trading setup. So the trading setup is the origin of the trade. If you see a trading signal, ask which trading setup has created that signal. So what has been going on in the financial market, people were looking for trading signal. It's a mistake. They should be looking for valid trading setup. Without the valid trading setup, whether the signal is gorgeous, beautiful, whatever it is, blonde hair, long hair, whatever, all right, yes, it's not valid until it's originated from a gorgeous trading setup. The validation of the trading setup is powerful. So when we see a trading setup on the daily chart, we must check the next higher time frame, at least weekly chart, monthly chart, higher time frame, to see the bigger. Once we spend more time validating the trading setup, now if a signal is fired, all right, we know now that there's a high chance that signal may be a good signal. When the signal is fired, do not enter yet. Now control the risk, see the best time and the best place to enter the trade. You can quote me on that. The trader that have been following, I know that I say that all the time. So here it is, the median line between the 100 and the 138.2% level. So you went above the 138.2% level, come back to the median. This is a story happening all the time. You go above it, try to come back to the trader, breaks it back here, and now here it is. It was there, a trading setup there between 2 Fibonacci key levels. Was there a trading setup at the median support and resistance level of a Fibonacci key levels? Yes, there was here. All right. So what I'm saying is true. So let's see again, between the 161.8 and the 138.2, do we have a trading setup? Look at this beautiful one. 1, 2, 3. Minimum price is free. Retesting on the edge. implement a top-down trading method. Stochastic is oversold. You know how to trade it. And here it is. It went up. So I'll share a secret with you. So all I'm asking you, if you think that this video is an essential for all Fibonacci traders that are trading, all right, feel free, help us please, share it on Tumblr, share it with your friend on Google+, share it on Twitter, all right, share it on Facebook, that's all, because I'm giving it to you for free. In return, help us please, share the message free. Don't keep it for yourself. I know you want to keep it for yourself, but don't keep it for yourself. The reason why I share a lot of powerful trading methods is because it helps the financial market to be more friendly, right? People will not do all kind of crazy things if everybody understands what is going on. So this is it about how to use Fibonacci median support resistance level like a pro. So as I'm telling you now, people have been using Fibonacci for years and they don't know it. They don't even use this. All right, they never implement that. Whether you will say, oh George, how about a 4-hour time frame? Yes, you can use your 4-hour time frame. But as I told you before, we can apply it on any time frame for any financial instrument, whether it's a currency, a stock, commodity, anything else, ETF, blah, blah, blah. It will, okay, make sense. You are looking for a trading setup at the median line between two Fibonacci key levels. Sometimes you may draw the line, you may not see the trading setup straight away there. Leave the line there. As you can see on the monthly chart, sometimes it may take months, sometimes it may take weeks, sometimes it may take even a year before suddenly you forget about that key level, and one day the price is forming a high probability trading setup at that specific median line, Fibonacci key levels. If you have any question or suggestion, please put in the comment section, and in due course, I will be recording another video to answer your specific question. Alright? If this video has been truly useful to you, my friend, please let us know by giving us the thumbs up. Alright? You think that George, this is another useless blah blah blah, please mark it down. If you think that this is an essential tutorial that can help other Fibonacci traders, alright, feel free to share with your friend on Google+, on Twitter, on Facebook, and also on Tumblr. Until the next time, enjoy yourself and be very happy. If you have not yet subscribed to this channel, it's free. Subscribe today, stay put. If one day you get upset with me, you are subscribed, please, few months later, come back again and subscribe one more time. We are friends forever. Alright? We are the STW24 traders talking about how to use Fibonacci median support and resistance levels like a pro. Happy trading to you all, and I will speak to you soon. Thank you for watching.